Consistently making money trading options is really difficult unless you know how to read the options chain in your trading platform. For our walkthrough, we are using thinkorswim, but pretty much all trading platforms are similar, so you should be able to follow along with us. All right, guys, so today we're going to take a look at the options chain in thinkorswim. I have my paper trading account here, and we are taking a look at Apple for our equity today. This is a rundown of the options chain. And as you can see here, we can choose our dates. We can go all the way out to what's available with options that expire in 2023, which is pretty wild and not ever something I've even considered taking a look at. But as far away as 2023 and as close as this Friday's expiration. For the short term, between 3 to 4 months, they go out with weeklies. The weeklies here we have are in yellow, and the monthlies are in gray. What we have here is that weeklies are less traded than monthlies, so people there's a lot more volume in the monthlies that we have. And so you typically can get better bid-ask spreads in the pricings that you have. Right here it shows you the bid and the ask, and typically in order for you to get filled, you will have to put in an order that is in between the bid and the ask for the market maker to fill your order. Now, when I'm looking at the option chain, this particular layout, which you can change, and there are many different options for how you have your setup. And you can even customize it as well, but we won't go through that today. What's critical to have known when you're entering into a new trade with options is what your Greeks are. Okay, your delta, gamma, theta, and vega are very important to keep in mind when you're entering a trade, because there's a reason why the cost of a particular option is valued at the value it is. It's due to the fact that your Greeks are set at a certain price as well. So, quick review over what your Greeks mean. For your delta, the D is for direction. The direction means the direction of what the underlying equity is moving at. And your delta means for every dollar that Apple moves, either up or down, your option will move in value up or down by that delta. So for $1 move of Apple upwards, this particular call at 125 will be worth 52 cents more than previous. For $1 move down at the 125, the value of this call will be 52 cents less than. Now it's a moving target, so if Apple moves down and moves down more and more and more, then your delta changes. Well, how do you know how much your delta will change by for every dollar it moves? That is the Greek gamma. So gamma is the change in delta for every move in delta. Okay? Theta is time, T for time. Theta is your time decay. So for every day that moves, irregardless of the price movement in Apple, you lose or gain 22 cents in theta. In this situation, it's all about you lose 22 cents in theta for every day that passes by. And vega is your volatility. And as you can see here, theta, vega, and gamma all have the highest value at the money. There's lower value further in the money and lower value out of the money. The highest value is right here in the money. The same situation is over here with your delta, gamma, theta, and vega on the put side as well. But what we have here is all your puts and all your calls on this weekly expiration of Apple. So in order to be able to see more strikes, you have options up here on your option chain. If you want to see all of them that are available, it will pop out and bring all your options. So it goes all the way down to 70. Depending on market makers, there's just no volume, so they might not have anything lower than that. And if we scroll all the way down here, it goes all the way up to 205 for your volume. And the volume gets really low, and your Greeks become irrelevant as well. So that's what you have available there. And if we shrink it back down to 10, then it gives you shorter options and really where the volume is all located as well. If you wanted to see the volume and open interest on your options, you can choose that choice on the layout, and that'll show you that as well. So here, once again, if we pop out, you can see what people are buying and selling. The volume would mean what orders have already been filled during that day, and the open interest is orders that are available to be taken and may or may not be taken by market makers throughout the day. And as we can see here, the further away from the money that we get, the less volume and open interest we have. So now that we took a look at the option chain for the different layouts that we have, these are for the most part the ones that I really like, which would delta, gamma, theta, and vega are helpful, and then volume and open interest always helps me as well. For the different spread options that you have, if you wanted to pick anything available with the combination of options, this is how you would do it. The majority of my trades, I like to do vertical spreads, and here you then are able to pick the bid and ask based upon a buying or selling, the calls or puts, and the spread that's already deemed to be right here. And you can take a look at the many different options that we have here that I'm sure we will take other time to review the videos and show how to trade each of these types of strategies, either bear or bull or diagonal markets. As always, like and subscribe if this video helped you, and we'll see you next time.